signals. All right. Longs on gold, sells on BTC and alts. The reason why, as mentioned in the analysis, we see in like US tech and them going to take a dip now. So you don't know once it is them thing dipping, this happening in the international markets, top 100. Once that dipping, BTC going to follow. Right, we get our entry earlier today, this morning, and it pulled back up, stop we out, just enter again, and they make a little money today, guys. The topic I want to discuss today is the day for us to run through this part of things, risk management, and why it important to the just your overall, especially now as a compound and you're building. Now we have a system. This is the system here. Three quarter. Every time you go to take a trade, the maximum you're putting on that trade is three quarter your account. You're using, well, for this example, I use a 20x leverage, right? Every $1,000 move on Bitcoin, you would earn 20% of your total account. Now, or sometimes you send a trade, you say put half of your account, put 30% of your account, and that because we calculated so that the risk always managed. Because you can't win every trade. You cannot. And you don't want to be, although you have a real good win rate, you lost one or two trades and boom, shambles now. Right? So you always manage your risk. Now, on a 20x leverage, I'll send this in the group on all to follow, right? This is if it is a trading on, like say, trading on Binance or BingX or BitGet, all of them is the same markets. Let's just say you're using a 20x leverage on your account. So then every $100 the market move from 90,000 to 90,100. That would equate to a 2.5% profit or loss. Remember, it could work both ways. Leverage could work in your favor, or it might work in your favor and all too. Right? So there's something to be mindful of. We win a lot, but you have losses in between. Cannot get away from it. So every 2,200 move, you get 5% profit, right? Etc. etc. So $1,000 move on BTC. And why does I use 1,000? Because most of the trades we aim for is $1,000 move. So like the trade we sent earlier, first trade we sent was this one, taking a short here, half of your account. Because we really wanted to see our liquidity sweep first. It went up and sweep after, and then so it is good. So it is good. Right? Taking a short half of your account, stop loss 95,350. We close half of the account at 93K. So when the market reach down here, 93K, we close half because most likely from here you'll get a little pullback. Then we'll enter again. Right? And they take profit 89,500. Now, 344. Right? Bitcoin, it moved 500 in profit, so it moves stop loss to break even, secure profits. Always secure profits. That is how it is. You have to trade because you don't want to see a up, like we was up 12%, and then boom, the market going back again. So you want to always secure the bag, always secure the bag. Right? So um if it is you're using 20x leverage on your account, which I know some people here, the newbies to the markets. I would encourage everybody, use less leverage. Yes, if it is using a higher leverage, you get more profits. Yes. But it could also be more loss. And when it is you're learning, you're going to get a little creative and try to experiment on your own because you have to. The only way you learn to swim is by jumping in the water. So we send you signals all the time, give you guidance. But in all reality, the only way for you to learn is by doing it for yourself. But use a right leverage now. Use the right leverage so that you know experience any big loss or any, you remember every time you open and close that trade, it have a fee too. You could just open buy, open sell, open buy, open sell, just get caught up in the market and boom, your money melting down every time. You could get a little small loss with the fees. Boom, that is a 2%, 3% loss. Like, I mean, you lose 40, 50% of your account just opening and closing, just learning. So use the right leverage on your account. So like 20x, and this is only on Bitcoin. On them all, so you have to use less because them all is move way more. So yeah. And as it is a move, like you see now we're using a 28x leverage because we are a little more comfortable in the markets and we look for precise entries. Because even self, all right, like the trade we take this morning, we entered 90K. Let me pull the chart so you'll see it. So we enter at 90K, right? Sorry, 95K. We enter at 95K. This little 95K here, I'll just draw a line. Right? Just an average. Right here to right here. This is if it is according to the leverage you use, bankers are in class by 50 minutes. Um, we enter at no short, this short 93.5, 95,350. All right. So this little thing here, according to the leverage you use, if you are use a 40x average, this trade going beautifully. Everybody in profits on this trade. Sorry to cut the thing. Everybody in profits on this trade. That melt dog. Go down, go down, go down. All right. If it is you use a 40x average, just that you don't see a immediate 3.5%. The thing going up it went up to 95, 200. You'd be seeing 7% negative on your account before it do this drop. So you always have to be comfortable knowing that, hey, I enter here, I might see some red first, but it's only a small percent of my account now. And as you scale up your leverage, the profits and loss gain more. So especially for people who know learning or now understanding the markets, they know understand how to maneuver, it's really important. Use a small leverage, especially when it is your learning now. I just never give advice, but two pieces of advice I'll give all you. One, invest risk-free money in this thing because you're going to get a little Jones wrong the way. And two, especially when it is a trading futures, use a small leverage. Seeing men how can I want 25x leverage and how can I do this? Like I have one account, my personal account alone, I trade 55x leverage. And that because my entries is be real precise. Or they're not like the account size managed for people for shareholders and max 28x leverage. And I was 20x leverage all the time. And I just increase it because you're a little more comfortable, you're a little more flexible, and realize you can gain more. Because this is the formula we're following, right? And it could work both ways. You could gain more and you could lose more. So that's why we entries have to be precise. Sometimes for a day or two, you have to stay out of the dance. So sometimes, hey, for like what day it was? Monday, I believe. Yeah, you ain't getting nothing because the market just see it upon you can't trade this. So wait for a good entry in correlation to what the big boys I'm doing. Dog, if it is this continue selling it, oh gosh. Oh gosh. Yeah. Had the alerts for long, yeah. If that's keep on selling Bitcoin, we're gonna think what goal saying. Sorry to sidetrack a little bit, just as we hear now. We had a entry at goal for to the 295. The market just going back down, touch this zone here. And I really like gold for higher prices, eh? To the 663. I don't know, we'll see what you see. But yeah, today, this is what it is I really want to, or to gain or spread. The risk management part, I think, because I see men using all kind of dovish leverage. It could work for or against. So always manage your risk to make sure that you're always in a comfortable position. Because you don't want one loser or two losers decimate you. The max, I would say max. Because this is still like max 40x, and they're enough for newbies, right? And it's still a high, a relatively high anything as in investing. Oh God, check, nobody don't want to see no 3%, 4%, 5% loss on the box. Nobody. So like put yourself in our mindset one time. The max 40x. And still, because you have these parameters here, a 200 move, the 7% of your account. A 400 move, 14%. So you never enter any market just so because you feel you're bored. Always enter the market because you get a good quality setup based on your analysis, based on other international factors. See what it is we start to do? We watch and see what the big boys are doing and then adjust. The trade going we way, hey, here we see movie stop loss into profit because you could just reverse and all too and you don't want to get a winning trade, turn into a loser. Right? And little bit by little bit, just take your time and go through the process. The game is steady, consistent wins and to build your bank systematically over time. That what it is that journey you want to know. Constant, consistent compounding. Because we know if the market go down, we can make money. If this thing flip on top of here and it's longs, make money both ways. Both ways, any which way. Right? We had a long yesterday and we end up just closing off and because the market started to move too much and that would make a little percentage on the long and then crack a short again. Or you see how it is we move, real flexible in the market, right? So we know how to analyze and how to get good entries and how to move stop loss in the profit and adjust to suit. This is a very simple formula we have with this concern, right? With this concern. I'm gonna send this in the Discord now so everybody will have it. Anybody new? Max up. Or do yourself a favor. Learn on small money and learn on small leverage. As it is, you sharpen up your skills, you could increase it over time. Increase your leverage. Increase your leverage. Is more profits? Yes. But it could work, it does work in the negative as well. So you know, just be mindful. So you always have to break it down so you have it like a science. And just little by little bit. Think anybody in this trade, where you will stop loss into profit, secure probably 25% of your position. Let's see if it is to follow through. And you just from here, just to manage it. You get a good entry, it start to move your way, just to manage it, and let the markets do whatever. If it is the big boys them drop, yeah, you can rack up 100 on this. If it is the big boys them drop. Yeah, but alert here. I want to set an next alert here for a real like here from 85.5, but just to fill this imbalance here. Let the market correct itself, fill them imbalances. But you have to go to like this imbalance here before. So you know we take profits before. Because the market could do whatever. Leave a little runner. If there's we get a pullback, we'll enter a position again. You know, any which way. We might close and if it is you're seeing more price action doing, we'll take a long, take a short, right? We fluid in the markets. Any direction we could crack them. Right? But on this journey, especially as you're learning, I'm gonna send this for you one time. And I'm recording this class as well. So I'll put it on the we'll put it on the university portal. Um, I'll send it in the shareholders group as well. And yeah, I'm gonna send some instructions how to the school buy back up, you know. The school buy back up there, boy. We you want me, you never know what the market gonna do, but you have an idea, but you know it will never make that move with good people in it now. You see, going down too much, okay. Shit, boy. Let me see if there's you can get a retest on this. But see what, so it does go. For sure, it have our next bus coming. We'll catch you next bus. All right, well, be safe. Have a good day. I'll publish recording in a little bit as well.